Yeah, I'll scoot past our usual chat today
Yep.
and just crack on from there. So, I mean, okay, I'm feeling I'm feeling okay with the with what's happening. It's like
Looks okay. It looks okay. Morning, guys. How you guys doing
morning
today?
time. Yeah, let me get Trading View up a second. I got
Yeah, it was pretty hectic last week, man. Far out, bro. I was like pretty much after the CPI and PPI, like that's important stuff. You know what I mean? I couldn't go both ways. So obviously I was watching things like a hawk, man. Like it's been interesting, very interesting. So we do have this week the last hurdle, which is the FOMC
mm-hmm.
meeting, and if everything goes to plan, everything looks pretty. Oh, I AVAX. Yeah, I was going to get in a position of AVAX, and I had Scott in my ear said about my baby, right? But still, I like AVAX, man. But like it is, it does. I do like it. I do like it. This is one of the dino coins that haven't bumped, so more
Mm,
than likely is going to happen. How far this thing could go, I don't know, but at least a good trade definitely will come out of it. Yeah,
sugar.
definitely.
Need sugar. Okay, yeah, sorry. I'm just having the first coffee now, man. I'm barely functioning.
I just woke up. I woke up this morning and our coffee, like the regular coffee that we drink, we
Uh,
don't run out. I say, oh shit, man. So I'm instant coffee, so I might not have the same energy as always. That's when you know you're addicted to coffee, man. That's when you know. You know what I mean? That you're addicted to some.
mm. So, do I need to prove my hypothesis or do I need you to disprove it? Like that
Let,
statement that I've made there, like,
monthly closes above 2330 to confirm a psychological shift and turn into support. No, that hypothesis is good, man. Definitely. Definitely. We're far away from it. The problem with the monthlies, right, is that um see that candle, see where you have the circle?
yeah,
All right. See the next candle over?
let's get this
The
open.
the the, the huge monthly candle.
This big, what would Scott call that? A boner candle?
Yeah. So that's kind of the problem of monthly.
Hmm.
Sometimes when you're overextended, right? There's likelihood to have a pullback on monthlies. You know what I mean? Like that's kind of monthlies. Monthlies, yeah. It's not my cup of tea because I'm not a very long-term trader. I'm more like a short-term. But yeah, that's kind of the only take. But definitely, that monthly above 2360. The problem is that you could have another Bonner candle that closes above that line before the end of the month. You know what I mean?
Mm, mm.
That's the catch of the monthly. So catching monthly swings, uh, they're tough, very tough. You know what I mean? Like because obviously, it
Mm.
could get overextended. But if we're heading down the direction that we head in terms of wild season, right? Doesn't freaking matter. Things are going to just go up, and that's it, man. You know what I mean? Like you're gonna have like monthly candles. If you go back in July 20, at the beginning of the chart, if you go all the way to the left, um, stuff like that.
Mm.
No, more towards left. See where those monthly candles just keep going up and up and up. And
My left
yeah,
here.
yeah, 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 yeah. That could look like that. So we haven't had that for ages. So uh,
But I don't think trade in the monthly is a thing, but I think
mhm,
that we can create these bigger kind of hypotheses. Well, I don't know what I mean by
mhm,
bigger hypotheses. We can create these hypotheses by looking at the monthly. Like if we look at this monthly, we can't really have an argument that there is this downtrending type of channel going on. It's tested the weaknesses with these, you know, FOMO type wicks going up. So the third time it tests this channel, I'm not saying that third time is a charm, but like this is looking like nice, really nice price action. I mean, sure, you're looking at what, probably a year, more than a year, just for
Mm-hmm.
cluster.
Mm-hmm.
But yeah, I don't
And
think trading it would be easy.
yeah, no, tough. Unless you do like the bottom sort of stuff, and you know what you have there, on the bot, like on the last couple of months, you do have like an RTV sort of setup in a way,
Mhm.
right? So but do you need to catch those beginning moves if you want to catch those things?
Ah,
But giving you this sort of take, then you can go and execute in small time frames. You know what I mean?
mhm.
That's kind of that's kind of the thing in terms of monthly. You
Mhm.
go and start looking the daily, or even the weekly, daily, 4 hours, 6 hours, whatever, and then trying to execute that way.
Nice. So we're going to wind our way to Bitcoin, a slightly different route this week. So we've just seen like presented like, oh, here's some evidence, not some evidence, here's an idea, and if it happens, it's likely to be, bullish,
Yeah.
that could happen. So uh we could now then, if we wanted to, because we want to see ETH break out.
Mm-hmm.
So we would want to look at, say, AVAX ETH to get
Yes.
further idea of what strength that there is.
That's good. Yep.
But then this week, if we change this to the weekly,
Mm-hmm.
right, this is like the Jedi level stuff where you have to start linking it all together because
Mm-hmm.
just had a really, or possibly I didn't actually check it, or a near enough, a really good close to that 4,600, which opens up
Mm-hmm.
this new channel that's the pathway to new all-time highs for ETH. But ETH could do a retest. We probably want it to do a retest this week. So there's a chance
Mm-hmm.
of downside in ETH this week. And then we've got
Mm-hmm.
to, I don't know if expect is the right word, but we've got to consider that that downside could be reflected
Mm-hmm.
into AVAX. So
Definitely. Oh,
if we think
definitely.
about the AVAX close on the monthly, we don't have to worry about this particular downside that might happen this week because we're looking 2 weeks in the future, and then that's what gives kind of the monthly it's a bit more of a power, I would suppose.
Mm-hmm.
It cuts out
Mm-hmm.
that near side noise. So I think that's kind of how it all fits together. But then whilst all that's going on as a kind of sub story to the big show, that's my internet's going. We've had a very, very, very good week in Bitcoin.
Mm-hmm.
We are now back in that 115, 125K range.
Mm-hmm.
So, what do we think we're going to do? Do we think that's it? The market's over. We're going to,
Let's do
or
a
do
test
we
here.
think we're going to have? I think, I'm just going to go for the same old simple view of this.
Mm-hmm.
We needed to get a weekly close above that 114K. We got it. We got it fairly emphatically at 115. So now there's probably textbook would be a retest of that line.
Mm-hmm.
So it's
Mm-hmm.
just going to be a case of what's that, if that retest happens, what's it going to be like? Is it going to be a volatile retest or a shallow retest? How we can presuppose that information, I'm not totally clear on. So again, a bit of
Well,
downside
technically,
maybe from Bitcoin, bit of downside from ETH, bit of downside from AVAX. So we
but
could get
technically,
downside
it's
this week, but I think that's bullish.
yeah, I agree. But technically, just to sum up, I think we have no fucking clue. We have no clue how it's going to happen.
Thank you for
Okay,
reminding me of
so
that.
always take that into, don't get too attached to a single outcome. Okay,
Mhm.
and obviously you can look at any single trends or anything, but at the end of the day, we don't know. there is possibilities and there is a high chance. So if we always, you know, think about from that perspective, then you risk, you're gonna risk accordingly. And if things don't go our way, then, you know what I mean? Like we'll still be around for next year or the, or the next trades around, you know what I mean? Like that, instead of, oh, we're going all in, going full leverage here, and then if market retraces, then we're fucked. As simple as that, right? So that's kind of somewhat always is not ideal. But always keep it in the back of your mind that it doesn't have to do that. Okay, it looks like it. Everything looks towards that direction, but you know there is always a possibility that the market will not do that. Okay, so have that in mind. Have that in mind.
Yeah, that's yeah, it's good for these to keep drawing it back to those core principles, because it is easy to forget. But I think that was
Very
pretty
easy, man.
cool to look at how that fits together. And then obviously we then bolt on further metrics. So I don't want to delay too much and get into your bit. I think you've been checking the chat as we've been going through. So as a general question, whilst you do your walkthrough today, Maurizio, could you talk a little bit about what is Glassnode? What are on-chain analytics? And are they the same as the Velo data that you're looking at? Or are just a very broad kind of
Right.
summary?
So yeah, so obviously Velo data, right? If you let me just share my screen, I think that'll be easier.
I'll keep an eye on the chat, but I'll try not to interrupt you too much.
I don't have my Glassnode up. But all right, let's talk about Velo data and where is Velo data comes from. So where is this data? All this data that we actually use, right? Like the aggregated open interest, the community delta, all the funding rates, all the sort of stuff. It's actually derived, like all this data is taken from the exchanges, right? That's all the data that Velo gives you. Velo doesn't give you any on-chain analytics, okay? So on-chain analytics, which is what Glassnode provides, right? And that depends on the membership that you take, okay?
Yeah, they've
So
for about I think $40, and then the next level's like 700.
exactly. Why so expensive? Okay, because think about it, like this is just some metrics, you know, so it gives you miners data. So essentially, you know, in order so every time there is a transaction, right? Like every time that someone buys or sells or transacts on Bitcoin, there is a transaction happening on chain, right? That's what blockchain is. That's what crypto chain is, right? So every time there is a transaction, a miner needs to actually hash that, right? So that's the fundamentals of it. So things that you can do on chain that you will not be able to do in Velo is actually, you know, figuring out the miners, the difficult and hash rate. So when it's more difficult to transact, when it's a lot of transactions going on, so the difficulty comes up, stuff like that that you can actually measure, right? That Velo does not have. Okay. Obviously that's part of, you know, same thing as the mempool. Mempool is basically on Bitcoin, right? All the transactions that are pending, right? So a lot of people use this data to see if it's a lot of transactions in the pending status, it means a lot of transactions on the network waiting to happen. Therefore, it's a lot of transactions. That could be sells or that could be buys. Then how do you use that information according to the price action to actually do your things? So it could be used for a small for short-term or long-term trading, you know what I mean? So stuff like that that you can use on-chain data. You know, that's just a simple example of what Velo doesn't have that Glassnode does have, and has tons of stuff different like that. You know what I mean? Like it has the supply, the UTXO is the and it's a lot of the intrinsics data from the blockchain technically. So, and it does it. You know, it has data information for Bitcoin, Ethereum. Ethereum is different. So each one of these ones will have a different metric. So for instance, UTXO doesn't exist on Ethereum. Ethereum works on a different, you know, I mean, so it gets very, very, very in depth, you know, because each one of these
So
blockchains.
here's a way then. So James the robot, who's
Yep.
programming the new Vault, he's got an article on his site, the Robot James, called "How to Make Money as the Average Dickhead." So the question is, who's the average dickhead that's using this? Like, you know, what level are people at that are coming in and going, right, I'm trading on the on-chain metrics. This seems niche, very niche compared to
Mm-hmm.
the open interest that you're looking at on Velo data.
And why this is, why do I use this one? Because this is kind of the thing that is happening on the spot. Like you can actually track the aggregated open interest and the spot volume every 30 minutes. So if you actually go very, you know, like if you want to do scalps, you can do this in 10 minutes or 5 minutes, and you can actually sort of figure out the price action towards that. On-chain data, you could get that sort of type of data, but you need to pay a lot of money, you know, to get that data, you know, and it only you will only get data on these assets. So you do have a little bit more assets here, but not, it's not everything, you know what I mean? So obviously, especially all the main tokens, you know, the main chains, which where all the transactions are happening. So that's the main difference between Glassnode, Velo, and there's other providers in data that provide different types of data. So that's what they sell, data, right? So how to use that data to actually make decisions on your trading. So yeah.
There's wow, that's the jackpot question. Interpretation. How do you
Correct.
interpret
Mm-hmm.
yeah, these charts? Because I remember they don't do them anymore, but Glassnode used to do these weekly videos. They still do their weekly
Yep.
insights, but it's written now. And they used to do these weekly videos with this, I think he was an Irish fella, and
Mm-hmm.
he would explain the intent behind the metric. And it was like, oh, okay, great. I understand how that works. But without that intent, oh, this is your score. You're like, okay, but how
What does that mean? You know what I
you
mean? So
help
you,
me?
you can go into the rabbit hole on so much data behind everything, right? And at the end of the day, like my cousin trades without any indicators, anything like that. He just likes price action and he's great at it. You know what I mean? That's it. No
Mm,
lines, no nothing. He just trades like that. And that's a way for him to use the information that he has at hand, right? In order to trade. That's it. I use my lines, I use my indicators, I use my stuff, and it works for what I do. So it's how you use the data, right?
mhm.
To make decisions, right? And then if those decisions are correct or not correct, you know, and then at the end of the day, you might be right, you might be wrong, you know, and on the interpretation of the data. But that doesn't mean that your interpretation today, because it's wrong, it doesn't mean that it's completely wrong. You know what I mean? So that's another caveat in terms of trading. You know what I mean? Like not because today you say, oh, it's because you know my open interest is doing this and this and that, and then it goes against you, that doesn't mean that you're wrong in terms of your hypothesis, in the definition of how you define your data and how you read the data in order to actually make trading decisions at the end of the day. That's basically what trading is.
Wow.
You know, yeah,
Separating decision from outcome, you know, that's the test of all mankind, you know, whether you
mate, it
recognize it or
is.
not, you know.
It's not easy, man. It's not easy. I struggle every single day with it. You know what I mean? Like, and yeah, because
Mm.
but at the end of the day, you get used to it. So.
Well, I think it becomes easier.
Mhm.
I'm speaking from my own journey here. I think it becomes easier the more that you comprehend the mathematics and the more that you understand like EV and outcomes over the long term. You know, this is why we have our risk to rewards for our trading. At first, those risk to rewards are just like, oh, great, I'm going to win 3 times that. You know, and then when you actually understand more about what risk to reward is and you understand the math behind it, then that contributes to you know, I don't know what they call it, decision fatigue. Anyway, enough of my
Mhm.
waffle, Maurizio. Let's
That's all right, man. No, that's cool. But that's, all those questions. I do going to go through what I'm seeing Bitcoin quite fast. It's pretty much the same thing that we've been talking about the whole last week. But I do want to talk about how we add into positions and leverage and things like that. Why? I did say that we are going to do a lot of more add into existing positions. So I think it's important for you guys to understand a little bit how to size, right? And what to do and what not to do if you're keen with, because I'm going to be adding a lot of things to the portfolio. Like not in the portfolio, we do have the spot side of things and the derivative side of things. And spot you just buy and buy and buy and at the end of the L season we're gonna sell. That's simple as that, right? Trading with leverage is different. So obviously I'm going to talk a little bit more about it so you guys don't get confused, because it could get confusing, right? When I do one trade, two trades, three trades within the same asset on derivatives, okay? And then if you don't leverage properly, you could get wrecked. So I'm gonna go through that quite quickly today. So let's jump into it. So first of all, I just wanna go through what Bitcoin is doing. So definitely, let's have a look at the weekly quickly. So yeah, Ian, just sort of with his drawings, it is a very good level that Bitcoin just closed above this. Obviously, that's on the back of PPI and CPI results, so how the market reacted last week on that. Now, the next hurdle that we have is FOMC, right? So I think after FOMC, whatever happens, either we start breaking to the upside or we retrace, as simple as that, right? FOMC is one of the key metrics that a lot of people have been waiting for. Some people have, there is a lot of talks about that the price, it's been already priced in. But if we look at this from the weekly, I want to ask your opinion. What do you see? Do you see because I'm going to give you my take on this. Do you see a bullish chart or do you see a potential retrace? Or what do you see here? Okay, I just told you. But what do you see? Yeah, bullish. Anyone else? And this is from the weekly. Obviously, we could fuck around the whole week and then finish on, yeah. So we have a range. We have okay. The daily looks all right. Here's my take. Last week we were talking about filling the gap of the CME futures, right? And if we span this on like small time frames, we just filled the gap yesterday technically. Okay, so this is the CME futures gap, right, that we were trying to fill, and that was my target for that week. Now after this, technically, I have no idea. I have no idea if buyers are going to willing to pay 115,000 for Bitcoin, or they want a little bit of a retrace to actually get Bitcoin a little bit cheaper. So always have in the back of your mind is what is people willing to pay for an asset. As simple as that, man. And if you see on the charts that people are willing to pay that price, then more than likely, that's it. That's the value. That's how you know what the price of an asset will look like. It's basically what people are willing to pay for something, man. So that was my target. We hit that target last week, right? Now we are on a no man's land in a way, right? So I think the next next decision will be the FOMC. So key targets to be mindful of, like the 114, which is basically the beginning of the range of the CME gap. And if we start breaking above here, then there will be a likelihood that we retest the highs, right? That's kind of how I see it. So that's kind of if taking from that perspective, if we go back to Bitcoin and we have a look at the weekly, then this could even seen as a lower high, a potential, right? So think about it from the perspective of what market structure looks like in terms of a bullish trend. So we have lower high, higher lows, higher lows, and potentially this could be, start breaking to the upside and have continuation of the trend. That's possibility number one. Possibility number two, from the weekly, we could have a potential, right? Higher, this is the higher high, and we could have a potential lower high, aiming for another pullback. Do you see both scenarios now? So these are both scenarios that it could completely happen this week. Would you agree or would you not agree at all? From the market perspective, market structure perspective. Perfect. Exactly. So that's sometimes market is really, really easy to read, and sometimes it's not as simple as that, right? And this is the time that it gets really tricky. Okay, why? Because we are kind of in the middle of these two options, right? I'll say 50-50, right? From the market perspective, from the price action perspective, from the weekly. Okay. Now we start zooming back down, right? And we go into the daily. So let's have a look at daily, right?
Look at that ATR, man. I just think, what does Scott always say about
I
sorry, that was just so to see.
But this is perfect because now you start, okay, so you start from the weekly and you start saying, okay, this is my possibilities. Now we start sort of feeding which one is it going to look like? Which one is the one that it is going to, the lower time frames is the one that is going to give you that sort of idea, right, of where the market is going to head, at least in the next week or so. You know what I mean? So obviously you use the daily to feed your weekly, and then you use your weekly for long-term stuff. That's the way I see it. And funny enough, you see these drawings that I did here, and they just played exactly like, like the whole week, So that was a good read of the market. Now we are in a different read now. So now we are at the level here, and you can actually start seeing a small development, right, of higher lows, right? So if that's the case, this is basically market structure, as simple as that. And this is a really interesting way to trade. And we do have now in the middle of, same thing, right? So daily we're printing like lower highs. So what that means is if we start breaking below this level here, more than likely we're going to go around this area. If we hold this level here, this is a very nice retrace and a very nice area, especially the 110, 112, to actually start climbing back up. You know what I mean? To break that structure again. Can we do it from here? Yeah, definitely that can happen as well. You know what I mean? Like if today, market starts breaking to the upside. Now, once we break this structure here, which is the 117, there is a high likelihood that we're going to retest this one. But until then, we are sort of in the middle of these possibilities, okay? In terms of price action. The good thing that I do like is that we do have ATR, you just pointed out. So the average range is the volatility. But remember that the volatility, right, is just a volatility measure. It doesn't tell you which direction the market is going to break. Have that in mind always.
Wow,
okay?
That's a crucial piece of information.
We tend to fuck it up, and say, oh, because the ATR is low. And then, it looks like it because we're going up, ATR is low, and then we start increasing volatility towards the direction that we want, then we can make that assumption. Until then, when volatility goes up in the direction that whatever direction will break, then, we have that assumption. So have that in mind in terms of the ATR. I've been caught up so many times with this thing, man, especially when I use the ATR. So this is a really good piece of information. Yep.
Is it too much of a leap then to say that it could be a volatile retest period this week if ATR is low and we're looking at coins thinking, oh yeah, we've closed above, great, retest, and we're in this period of low volatility?
You
Or am I stretching a bit there? Am I reaching a bit, trying to fit something?
Yeah, I think you're trying to fit something that
I want to happen.
Exactly. You know what I mean? Because obviously you don't know yet until that happens, right? So if you see periods like this is a perfect example. So you start seeing the volatility coming down, right? And in the same period, you see markets start coming up. Then there is a high likelihood that we're going to have a volatility towards the direction of the price that is breaking up. You know what I mean?
That's a divergence, right?
Yes, exactly. Yes, exactly. Yes and no. It's because obviously with ATR divergences is when something happens in one direction and the price action does the other thing. But ATR is just measuring the volatility, right? So and you can see the divergences with open interest. I'll show you a real divergence, but this is just basically
the volatility is how much the candle wiggles within the given period.
Exactly right. And then the regular one is actually 14. This is a 14 ATR. And what that means, if you look from the daily, is in the last 14 days, right? So if you look the ATR in the 14 period on 6 hours or in an hourly, is completely different. That's why we use this metric, which is the last 14 days. You can use the 7 days, something that makes sense. You can use the 30 days, something that makes sense. So 14 days is like 2 weeks, kind of. So this is measuring the volatility within 2 weeks in layman terms. Okay.
Nice.
So, yeah. So going back to this, yeah, this is pointing out to a really great breakout. However, I just want to make sure that it could happen today or it could happen once we retest this period, these lows. However, if we start breaking down this, now we open again another possibility of lower lows. All right. So which one is it going to be? Don't know. Right. Now we now go back into Velo data, right? And this is how you build. This is how I build the positions, right? So now in Velo data, basically what I'm seeing is that this level here, right? This level here is being bought by spot buyers, right?
Yeah.
So this is the biggest metric that I'm seeing. And now I'm seeing that obviously towards the weekend, right? The spot keeps buying. Okay. Why are we seeing price coming down a little bit? Because obviously you see a lot of leverage, a lot of people closing positions, but that level is being held by spot buyers buying. So that gives me a lot of hope. Now, my hypothesis of going up this week starts increasing. You know what I mean? It starts increasing in from possibilities, right? Now my possibilities start saying, okay, so now I'm 60, now I'm 70, now I'm 80, now I'm 90, but never 90, but thinking from that perspective. So this price action looks pretty promising. Same thing that I did talk about, guys, last week in terms of Solana. So Solana look amazing, man, in terms of CVD. The amount of CVD coming through on those levels was very supportive of the price, right? So it's looking pretty good, man. It's looking pretty good on Solana. So obviously be mindful that if we start seeing a lot of drops in terms of CVD, that means spot buyers are puking their positions or selling, right? And if we see this coming down, that's why I haven't sort of taken profits massively,
Mhm.
I want to say the downside is this could happen in a day, man, and that's the risk. Okay, but that's the risk that we're taking. But if
Mhm.
we, if we start seeing a lot of spot being sold, right, then more than likely leverage will follow until a point that Solana buyers will say, oh, I think this is a really good price again to rebuy, and then they start buying, and then that's how the market is formed, okay, in terms of that. So far, if I show you this, it looks pretty good, right? Bitcoin now, it looks pretty good in terms of supportive sort of CBD volume, and Ethereum. Let me show you. Ethereum is the only one that is. Let me show you. Check this out. All right. So now, if you look at this, right, what do you can make out of Ethereum? Do you think it's good, or do you think it's not that good? What's your take on this? Like, by looking just these three main.
I mean that CVD looks a little bit different than the Sol one we were looking at.
Exactly. So last week, we were looking at Ethereum, right? And that looked amazing. And that it made the price action, right? But now it looks like the spot they're selling at this level here, right? They're selling at 4,700, okay? Now, the only thing that is supporting the market at the moment is leverage traders, which is different than Bitcoin, which is being supported by spot traders, and Solana, same thing. Ethereum looks a little bit different, right? So Ethereum, in my opinion, by looking at this chart, it could, give us a little bit of weakness or a little bit of fucking around, right? Before we start seeing more spot buyers coming at these levels. So what this tells you is that spot buyers are not willing to pay more than 4,700 for Ethereum at this stage. Can this change? Definitely. If you, let's say, and this is what the dynamics of the market. Let's say that leverage traders start to push in the price up to 4,800, and then spot buyers might say, "Oh shit, I think I'm gonna miss the boat," and then start buying, and that could be another spike. So I'm not saying that this could puke, but this is, if I don't see any spot, there is a high likelihood that at some point we can have a little bit of a leverage flush on this, because it's only leverage traders right here, especially from this level, right? From the 40, I will say 4,600, give or take. So that's
With
kind of what I'm
that
saying.
level that those spot buyers like to sell, does that mean that we're likely to run into a whole bunch of sell orders when we get back up to that level again? And you got kind of the Turkey thinks it's okay until Christmas Day scenario going on, that we need to really punch through all of those sell orders to be able to
No,
kick.
this is okay. So one thing is sell orders, and one what do you mean by sell orders? Do you mean like shorts, or do you mean like sells? Like, because there's two different things from the market perspective.
Well, this is a really great question. Yeah, so I was thinking of bears that are actively placing sell orders
Okay.
that they want to get.
Okay. So beautiful. Let's talk about that, because let's clarify the definition of those things. So
Okay.
what a sell order in terms of their shorts opening on leverage, right? So what that means is there are a lot of shorts, people like you and me that trade derivatives trades, right? Then I say, I think the market is going to puke today. I'm going to open a short, right? So that's a short that's being open in the market, and I'm hoping for the market to go down in order to make money, right? So that's basically selling pressure. Why? Because in the back end, what they need, or what the broker needs to do, is actually fulfill that price. It has to make sure that it takes spot inventory, and it does a lot of things in the background in order to do that. So that puts a lot of selling pressure on the spot price on ETH. Okay. Now the spot is different. The spot is, because it's no pressure. Like if you sell, it's just you're out of the market, right? A short, you are putting more pressure on the sell. you're putting more pressure for people to sell on the spot. Now, if a spot start selling and say, no, that's it, then your shorts are going to win, you know. But if spot starts buying, right, then people that are shorted at this area, price starts going up. Why? Because obviously there's demand for the asset. Therefore, those shorts at some point either get liquidated, or you say, no, you know what, I don't think this position is going to work any longer, and then you close it, and then the price starts going up because it opens the gate to the upside. That's how you get the massive jumps to the upside, okay? When you have a lot of shorts piling up, spot comes in, and then bang, gets liquidated, and then market just piles up to the upside. And those are basically, the short squeezing away, right? Squeezing all the shorts. So just making that clarification in terms of the definition of what a sell is, what a short is, and what selling your spot means, okay? So going back to that in a nutshell, obviously if ETH doesn't look that great from this perspective, but if when we go into the price action, same thing. We're going from the weekly, right? So from the weekly, it looks very similar as Bitcoin, right? This could be seen as a two ways. This could be seen as a retracement, people taking profits out of this area, right? And now we can open up a little bit of a pullback, or we have continuation to the upside. We have 50-50. But if if I start saying what Ethereum is going to do today, perhaps, or tomorrow, I'd probably say that it's going to retrace, a little bit just by looking at the CVD values. Okay, so that's kind of something that I wanna, highlight. Solana looks very good, man. See the difference between. So, which one do you rather be? You rather be on Ethereum or you rather be on Solana?
Solana.
Exactly. You know what I mean? And it's going to be a point that Solana is not going to look that great, but then Ethereum is going to look great. So, so Ethereum, so I will say Solana and Bitcoin looks pretty solid, right? Ethereum looks a little bit iffy, so I'll stay out of Ethereum trades, technically. You know what I mean? That's kind of so let me just go through and quickly, because we're running out of time. I think this is very important to highlight, for people that are doing leverage, right? Want to make sure that you understand how do we add into a position. Why? On Friday, let me just bring out the positions that on Friday we added into Arrow. Okay, so we've been adding different trades. So we did ENA, we did Arrow. I'm going to be adding a lot of these ones again. I'm thinking about adding Uni, ARB, and things like that. So you have to make sure that I want to make sure that you guys understand what we have here. So let me just bring this to the daily. All right. So with Arrow, we basically had this position from July. It went a little bit on the water, and now the first position actually, basically we are in profit, right? So we went very nice on profit here. Now this position remains open, right? Now this position, we just opened a brand new one on Friday, right? Which it worked actually pretty well over the weekend, and over the weekend we had a retrace. Okay, so we are on that range. Still looks good, but then I just want to make sure that you guys understand how you size accordingly. Okay, same thing with ENA. So ENA, we took this trade right here on July. That now this one is actually massively profitable, and we open a brand new one here, right? So I'm gonna do the example with this one, and because I'm gonna be adding more on ENA, okay? And this is on leverage. It's not the same as a spot that you just buy. So you have to be very careful how much are you risking and how much is your whole leverage thing, okay? So our first trade, right? It was at this price, at entry at 0.28 or whatever, and the stop it was a 0.21. Okay, so it's always a difference in between the entry and the stop. Okay, now you have to, and obviously the difference is just, you know, this one minus this one, and that gives you the difference. Okay, now you have to understand how much you're gonna risk per trade. Okay, so let's say you risk 500, 1,000, 300, but this depends of how much is your size in terms of account. Okay, so let's say you have account of $10,000, right? Usually, if you trade leverage, right? If you trade leverage, then you can set it up to 10x, 25x, 100x, but that doesn't mean that you have to use the whole thing. You have to make sure that I usually set it up at 25x, but that doesn't mean I'm trading on 25x. Very important, very important. It doesn't mean I'm putting 25x of my whole capital in one single trade. And as you can see on our trade log, right? The sizes are there. You can actually work it out. So let's say you go, you know, 10x, right? And you say 10x. So essentially, you have up to $100,000, right, to place positions. Up to $100,000. $100,000 here, right? Now, when you say that you're going to risk, let's say 500, you risk a percentage of this. This is the amount that if you hit the stop loss, then you're going to lose. Whatever you say, whatever you feel comfortable with, 500, 300, 100, 1%, 5%, 3%, 5%, 10%, whatever it is, right? So let's say, you know, obviously this is a 5%, you know, 500, right? So if this trade goes against me, then I'm going to lose $500, no problem. Okay, so you have to be completely confident with whatever you risk, and this is your decision. I cannot actually tell you how much you're going to risk per trade. As a guideline, I usually go between 3% to 7-8%, depends on how the market, you know, lights up. And this is when we started adding more, right? That's why I don't put anything on one trade, because you don't know what's going to happen. So if you start doing a 2%, 3%, you're going to be okay. And then if market continues our way, then you add another 3% risk, and then and so forth, right? So that's how important. That's why I want to highlight this today, because it's very, very important. So with this perspective, right, this is our entry. How do you calculate this? So essentially, you take your risk, whatever it is, 500, 200, and the formula is very simple. You take the difference between these two things, the entry and the stop, and you divide it by your risk. And that's going to give you the amount of contracts that you need to buy. It's like how much INA I need to buy. So this is the amount of contracts that I need to buy. So technically, I need to buy 7,451 contracts in order to have this risk. Now, your position size is just as simple as your contracts times your entry price. And this is the position size. Like, this is how much are you putting in order to sustain this position. Okay, I hope that's clear. You can actually go back and revisit this video several times. Now, why this is important, right? Because now you do have a position open that is 2,129, but this position size is not from your $10,000. It's actually from your $100,000 leverage risk that you can. So you can open probably 20 more of these positions using this risk, right? So have that in mind, because a lot of people get confused. Obviously, with a spot, it's very simple, because if you buy $2,000, you just bought $2,000 worth of INA. That's it, right? So I hope that's clear. That's our first trade. When things get tricky a little bit more is when, you know, let me just open up INA here. So that was our first trade that we took on. That was our entry. So once our trade starts working, then you can either take profit, move the stop loss, and have no risk whatsoever. Whatever the market decides to do, great. So that's what happened here. And then what we decided to do, right? Because right here, market start going better. So I'm going to add more. So I already have some profit here. I'm going to add more risk or more into this trade, which happened on the 25th of July. Now, on the second trade, you can decide to risk the same amount of money, same thing. You can decide to risk the same amount or risk more or whatever you want to risk, right, on that particular trade. Now you do the same calculations, right? The difference between your entry and your stop, right? You have a difference, you have the contracts, and you have another position size. Now, this is when it gets tricky. Why? If you add into a position on your platform, right? And more than likely, all the platforms work the same: Bybit, Bluefin, Hyperliquid, right? It's not going to show you the two trades because it's the same asset. Therefore, they're going to combine the two trades. So unfortunately, you have to manage this manually. That's when it gets complicated, right? And if you fuck it up, you might going to fuck it up. That's why we use FinRep, because obviously it does it automatically for us. But this is when, if you add into a position, right, then on your platform, then now it's going to show that you do have this, that you purchased 12,000 contracts, which is the sum of the two positions, okay? But now it's going to show you an average price, right? It's not going to show you your first entry, and it's not going to show you your second entry. It's going to sum the two contracts, and it's going to show you the average price, okay? This is when it gets tricky, because now you need to manually keep track of these two positions manually. Otherwise, you don't know which one is which, So this is something that I want to sort of highlight in terms of, if you don't know, if you don't know how to do this, probably don't add into positions, or just buy spot, right? That's the simple thing. But that's why we keep a log, and we know which is our entry and our stops and things like that. So on your platform, on the platform itself, what you need to do is, Bybit allows you to set different stop losses, right? And in each stop loss, you can actually say, all right, in the second trade, if my stop hits, then I want to close this many contracts. You know what I mean? You can actually program that on Bybit. On Hyperliquid, for instance, let me just, on Hyperliquid, you will not be able to do it, but what you could do is, when you set up stop loss on Hyperliquid, right, you can actually configure an amount, right? So the amount that you configure, you're going to have to configure the last trade. Okay, this is the last trade that you configure first. And then if that stop hits, then you need to go back and reset your next stop, your stop for the first trade. You know what I mean? So it's an extra step that you need to do. So when you actually say configure your amount, you put your SL price, which should be like 0. Whatever your second trade is, and then the amount. Let me just show you within. All be easier. All right. So once you click here, configure amount, then you're gonna set up the stop loss of the second trade, of course, because that's the first one that is going to hit, right? And then you put the amount of INAS that you want to close on this trade, right? Which is basically 5,340. And then if this one hits, then you need to come back and actually reset again your stop for your first trade, then and so forth. And that's, obviously something to be mindful when we start adding into positions. Why I'm saying this again and again and again? Because we're going to keep adding into positions. And if you guys don't know how to manage that, then, be really careful on how do you add it. If you do not have a position, right, then you treat this one as your first position. All right. So that's simple, right? Like, let's say you just joined yesterday, and then, we went into a third trade, then you just take that trade, and then that's going to be your first trade in a way. But that, I hope that made sense, so So yeah, I just want to highlight this because it's been I've been, you know, postponed explaining this, and I know there's a lot of people that are new, and I just want to make sure that you understand this. I hope that makes sense. Do you guys have any questions about this, and in the last 5 minutes, I think I just gonna go through a few coins that I'm watching closely. So
That was really great, Maurizio, and obviously the replay will be available
correct.
very soon. So definitely worth going through from there. And always that overriding thing of just be careful with the leverage, you know, like probably
Exactly.
if you catch a move right at the start, my personal is about 4x leverage. If I catch it kind of midway, maybe buying on a pullback, then drop back to maybe 2.5 leverage, I think is fairly sensible, you know.
So, and yeah, just make sure that you use your calculator to calculate how much contract, how much leverage, how much you're gonna lose, how much are you willing to lose, right? If the trade goes against you, always understand how much are you willing to lose when the trade goes against you, and if you're okay with it, then put your leverage on. Okay, so yeah, that's kind of in a nutshell. So now that we get that out of the way, let me show you a bunch of stuff that I'm watching, man. Everything looks pretty good. I want to talk about Mantle. Mantle, beautiful trade, man. Look at this trade. Beautiful. I'm still haven't taken any profits. What I did, I moved the stop loss, so I have no risk whatsoever. So why I haven't taken any profits? Because still I see this very strong, and markets, right? If we start seeing a lot of things breaking out, don't know where I'm going to take profits. I might just you know, start seeing when the market starts losing strength, and then I'll take some profits. Then perhaps when it hits 2, I might take 50% off just to be safe on, you know what I mean? As 2 is like a good psychological sort of number. So that's what I'm heading with. In terms of the trades that we took, yeah, Arrow. Let me talk about Arrow. Let's see what happens today, but it doesn't. Yeah, I was expecting a little bit more to the upside. I might close the second trade. I'm still on the first trade. Because we might see a little bit of a retracement today. So I'm looking at that one closely, and I'm looking at Jupe as well. So I'm looking at closing Jupe as well. So yeah, if we do have a retracement, then yeah, this one we can probably get better price. However, I'm seeing that it's been a lot of support in this area. You can actually see on the 6 hours that a lot of people are buying on this area. So I'm still holding that one. New stuff that I'm watching very closely. The World Liberty fucking token. This one could be a really good spot buy. Okay, we could have a lot of weakness, but I think this could at least come back to 0.3, give or take. So I'm watching this one very closely. I'm watching SPX as well. So XPX, it's been a very strong. It was very strong on the last sort of run. So I would do expect on market strength, this one will come back. Watching this one very closely. I'm watching Agent. So Agent on the back of this could be a really good spot buy as well. So it could get very volatile, but it could actually get very a really good price appreciation, this one, if Ethereum keeps going. So Agent, very relatable to Ethereum, right? And in terms of Solana, I'm looking at Useless. So Useless was like a meme token, is on the back of Solana. So this one looks like it's catching a little bit. And I'm watching Tau and Sora as well. So Tau, I really like it for a spot hold. So what I might do in the next couple of weeks will be to sort of allocating all the spot buys and things like that, so we can get a better portfolio out of this one. So yeah, man, a lot of things could happen this week, but those are my favorites so far for these ones. Of course, Bonk. Watching Bonk very closely, right? Where are you? right? Very, very closely. I was going to go over the weekend, but I already added too many positions on. I already added. We have Ray and we do have Jupe, so there's too many correlated to Solana. But I think Bond could do pretty well. He's aiming towards the next high right here, right? And if he breaks, yeah, I can definitely see this one going all-time highs. So I really like Bonk on that regard. So I think that's it for me, guys. So yeah.
That's really great, Maurizio. That was a superb session. So let's just have a quick check-in then. So last week we got the thumbs up that we wanted to continue this style with the calls where we do a little bit of training. We asked Maurizio to explain something a bit more in detail. So I just want to check in that everybody's cool with that. Coins and coin reviews. So Maurizio publishes updates, video updates throughout the week. So, you know, for coins and what's happening in real time, I urge you to watch them. But he produces them on a Loom video. So that means that you can get the transcript. And then that means that you could use something to help you manipulate that information so that you could understand it quicker, you know? There's a lot of information to process that you receive in the crypto world because there's a lot of information that you need to shut out as well. So keep up with those update videos because they all build off of what we've spoke of this morning. And as long as everybody's cool with this format and Maurizio's cool with this, then until Scott comes along and tells us all to wash our brains out with soap, we'll carry on in the same style. All right then. Cheers.
All right, guys.
Ta-da.
See you guys. Have a good one.